Has self-storage reached a tipping point? The industry featured in the Wall Street Journal, and two friends of the podcast featured prominently in the story. Self-storage stocks enjoying a banner start to 2026. What's driving the surge and what might slow it down? And finally, a massive event for S3 partners. Barry, Sherman and I have been working on something big for the last 10 months. All of that and more on this week's episode of Storage Unlocked, brought to you by our title sponsors, PB Brown General Contractors. I'm your host, Thaddeus Campbell, Director of Business Development and Strategic Branding at S3 Partners. Well, it's not every day that the self-storage industry gets featured prominently in an article in the #1 read business newspaper in the country, the Wall Street Journal, this week, running an article headlined, "America's Self-Storage Craze Has Reached a Tipping Point." Of course, the crux of the story will come as no surprise to anybody involved in self-storage. The incredible development boom over the last decade that's nearly doubled the amount of net rentable square feet in the country, starting to see more and more pushback from local municipalities, making it harder for self-storage projects to gain approvals. Now, friend of the show, our data partner, Tract, and their CEO, Noah Starr, featured prominently in the article. Noah quoted as saying, "There has never been a period with more people using self-storage than today." The great irony of the pushback from municipalities, Noah went on to say how 12% of Americans are now utilizing self-storage space. That number only expected to grow as millennials and Gen Z are now using storage at a 16% clip. Baby boomers down at 6%. So as baby boomers age out of the market and millennials and Gen Z start to take more and more space in self-storage, we only expect that percentage of usage around the country to grow. Of course, the article in the Wall Street Journal coming in the shadow of Q1 earnings reports for the self-storage REITs. Public Storage scheduled to release their earnings report Monday after the closing bell. Extra Space scheduled to close on Tuesday, with both of the two largest REITs scheduled to hold live earnings calls the day after they release their reports. We'll very much look forward to that. And of course, we're excited to have Noah Starr back joining the show May 7th after all the earnings reports have been released for the 5 storage REITs. He'll join and break it down like nobody else can. He is absolutely incredible at diving into the data of what's really going on. Noah has joined us many times before. Of course, Q1 earnings, the CEO of Tract was out on paternity leave, gifted with the birth of his incredibly beautiful daughter, Charlotte. We're excited to have him back in the fold. Definitely a can't miss episode. So put it on your calendar, May 7th, that Noah Starr will be joining the show to recap Q1 earnings reports. Noah, not the only friend of the podcast to be featured in the Wall Street Journal article. I've been lucky enough to have storage icon Maurice Pacoda on Stories Behind the Door. Maurice also featured in the article, the founder of National Storage in Michigan and Ohio, the largest owner of self-storage in those two states. Maurice, of course, got his start in self-storage back in the 1980s, started out as a broker before he started building National Storage as an incredible brand out in the Midwest. Talked about how customers simply want to be on their main road these days, a far different industry than when he got started back in the 1980s. I was lucky enough to touch base with Maurice, talked about the article. He said it was kind of funny. He spent a long time talking to them for the interview, and they only used 2 short quotes. But he was excited about 2 things. Number one, the quotes they did use quoted him correctly. Number 2, it was not a hit piece on self-storage. Pagoda saying that generally the article was very well done and fair and balanced. Well, I also had a chance earlier this week to talk to another legend in the self-storage industry. Scott Zucker joined the Stories Behind the Door podcast earlier this week. And the subject of the Wall Street Journal article came up as Scott was talking about his incredible friends in the industry, saying, and Scott, like Maurice, talking about how the industry today is a far cry from when he started representing storage owners all the way back in 1987.
As a service industry to our customers, we've had to accommodate some of these urban challenges to fit in with the infrastructures of the communities. And I think we've done an amazing job. And some of these facilities are gosh darn beautiful. I mean, absolutely beautiful. Sometimes you don't even know they're self-storage facilities, which was part of the story.
One of the great ironies also of the article and the increasing pushback from municipalities is that the architecture, the design, as Scott said, of these self-storage facilities continuing to improve, such that a lot of times, as he said, you don't even realize that they're self-storage facilities. Scott Zucker featured this month as the who's who in the self-storage industry in Modern Storage Media's Messenger magazine. If you want to get more on Scott, in the article, you can see he talks about all the arguments against self-storage can be addressed and resolved with a good design and a flexible planning department. The flexible planning department, that part can sometimes be hard to control, but Scott's such an ambassador for our industry, fresh off speaking live at SSA in March and ISS earlier this month, also featured in Modern Storage Magazine. Make sure you pick up that article, an incredible article on the legal legend in the self-storage industry. Quick note, somebody who's very well known for 2 podcasts in the self-storage industry will be the who's who of next month's Modern Storage Media Messenger magazine. I've gotten a chance to see a sneak peek of it. I'm a little bit biased, but I love the article. Shout out to Brad Hadfield, who did an incredible job with the interview, and very excited. Hopefully you guys will enjoy next month's who's who in the Modern Storage Media Messenger magazine. You can check out the link to my LinkedIn page where the Stories Behind the Door podcast with Scott Zucker is live. We'll also have that featured on our YouTube channel here in a couple of weeks, a little bit more edited version of that. But check out Scott Zucker, as I said, somebody who's contributed above and beyond the call of duty to our incredible industry. And if you're an owner or an operator, if you've ever built a facility, signed a contract with a general contractor, signed up a lease agreement with a tenant, done an auction of a storage facility, it's highly likely that language from Scott Zucker was used in one of those contracts. So grateful for him for coming and joining the show. Stick around after the break. We've got a lot more to cover. We're going to talk about where storage stock prices are at. We're going to talk about the round table and what that is. But first, a word from our title sponsor. Storage Unlocked is brought to you by PB Brown. Over $1 billion in ground-up construction delivered from single-story to Manhattan high-rise. Institutional grade, engineered for performance, and designed to stand out. Great storage catches the consumer's eye, drives traffic, and helps lease-up happen faster. From Manhattan to Miami, California to Hawaii, PB Brown is the GC to trust for your multi-million-dollar storage development. Well, 2 weeks ago on the show, we talked about the incredible amount of capital that's being infused into self-storage space between bond raises by Public Storage and SmartStop, joint venture agreements from Extra Space and CubeSmart. That totaled $1.6 billion coming into the self-storage space. Another one that squeaked by and I missed it. I don't know how I missed it, but I missed it. I'll throw myself under the bus there, but fortunately caught up. SmartStop announcing in late March that they have entered a $100 million joint venture agreement with AXCS Capital. AXCS, a bridge lending platform heavily involved in multifamily, coming into self-storage even more now with this announcement that they are going to partner on a JV opportunity with SmartStop. A lot of projects that have come out of the ground over the last 3-4 years that have not reached their pro forma projections. It's looking like that these companies are preparing to get long-term opportunities with some of these projects that aren't performing well enough to get long-term debt. So SmartStop announcing the $100 million JV with AXCS Capital. You can see here the joint venture. You see the words from H. Michael Schwartz quoted there, gives them the opportunity to combine their expertise in storage with AXCS's expert in lending and capital placement. AXCS been a player in the bridge space. They're not a traditional bank. They're not a CMBS or life insurance company money. They specialize in bridge financing. And I think this deal says a lot about where we are at in the cycle. Everyone loading up their silos for what appears as if the REITs expect to be a time when there's going to be some incredible opportunities coming on the horizon. That total $1.7 billion raised by the REITs in less than a year, not counting the $4 billion that Public Storage announced in lending from Morgan Stanley and Wells Fargo just for the NSA acquisition. So incredible things happening. What's next? As I said earlier in the show, I don't have a crystal ball, but it's hard to believe that the rate of the consolidation that's happening in self-storage is going to slow down in any way. In fact, I expect the exact opposite. We're going to continue to see big money come into the market. We talked about this last week on the show. We were talking about small bay flex, but the same principles apply. Cody Payne, big name in the small bay flex world, talking about the challenges to multifamily and office specifically, driving capital to other niches in the commercial real estate industry. Self-storage certainly benefiting from that. Well, I will continue to beat the drum for local and regional and federal level SSA events. Of course, the national SSA doing yeoman's work. We just came off San Antonio. I was sad that I didn't get to go to the event. We got a couple events coming up in the regional scene over the course of the next couple months. You can see the Northeast Storage Expo. For those of you that know me, the New England states represented. That's my place of my birth. So excited to get back home and spend some time with the amazing people in the industry. If you're not registered for NISA for the Northeast Storage Expo yet, use the code Thaddeus10. You will get a discount on your registration. Make sure you say hi if you see me up at that event. And then in June, the Gaylord National in National Harbor down in outside of Washington, D.C. Another great place for an event for the Mid-Atlantic Self-Storage Show. I just believe, as I just talked about, the increasing consolidation in storage. Mom and pop owners have been the lifeblood of state and regional SSAs for decades. As we start to see more and more consolidation, I believe it's even more incumbent on all of us that are in the industry to step up and do our part, even if it's simply signing up, registering, and attending these events. Even better, get involved. Go and help these regional and federal SSAs as we continue to see increasing legal pressure and increasing legislative challenges that could completely reshape our industry if we don't stay ahead of it. Well, I'll continue to beat that drum. After the break, we're going to take one more break here. I want to give a shout out to our other sponsor, my partner, my company that I work for, and Barry Sherman has been such a proud supporter of the show. Let's take a quick second to hear from S3 Partners. In self-storage or small bay flex, execution matters. S3 Partners moves projects from concept to completion with 3 integrated services. Project Sync manages your development, vendors, timelines, budgets, and construction oversight. Market Expansion sources opportunities in the right markets to grow your pipeline. And Deal Sync delivers institutional level underwriting so you can pursue projects with confidence, helping you move faster and build smarter. S3 Partners, storage, flex, growth. I mentioned earlier in the show how the earnings reports are coming up next week for the major REITs. I thought it'd be interesting to take a look at where stock prices are this year. And boy, was it interesting. Let's take a look first at the smaller 3 REITs. Of course, the most interesting thing here you'll see in March, the major straight north of NSA in the wake of the announcement from Public Storage that they're planned to take over the smaller REIT in third quarter of this year. NSA up 54% this year. Currently, their stock price trading higher than the price that Public Storage announced they would buy NSA at, which was in the $41 range. Why is it trading even higher than ostensibly it'll be? Well, Public Storage has also seen a pretty good increase. You can see here, not too shabby for CubeSmart at a nearly 12% increase on the year. SmartStop a little behind at 3.67, but still in line with the broader market. The Dow Jones up a little over 2.5% on the year. The S&P in the 3% range. NASDAQ doing a little bit better overall at 5% growth year to date. If we flip over to Extra Space and to Public Storage, Extra Space a couple days ago was in double-digit growth for the year. They've slipped a little bit under that, but still really strong, almost 9% growth in their stock price this year. Public Storage up almost 19% in the wake of the NSA announcement. Apparently, their Q4 earnings report, the announcement of CEO Tom Boyle and their PS 4.0 agenda, their PS Now platform, where they really are going to lean heavily into technology, being well received in the market. Very hard for me to understand how the stock prices are performing so well, given the backdrop of what's going on in the broader economy with the housing market. Obviously, with what's going on with foreign policy, has put a lot of shall we say, uncontrollables into the equation. But stock prices for the self storage REITs still going along very strongly. Well, I wanted to take a look at the housing market this week. It's been a few months since we've really dove into it. Every time we see signs that things might be coming around in the last few years, we go right back to where we started. You'll see on this graphic, we're going to talk about a broad range of what's happening in home prices. I think it's interesting to really point out median home price going from January to February to March. Steep rise in what's going on in a short time. Not too steep, but $5,000, over $5,000 in a rise in median home price. That's, a significant amount. In the other side of that, we saw a quick reprieve in February with mortgage rates dipping under 6% and people starting to think that maybe that was going to start to really increase sales, especially in light of the available inventory. You can see inventory in January sat at 980,000. That went over a million. That inventory going up even higher in March at 1.1 million, but interest rates starting to tick back up. Bad news as we flip into April and we take a look at what's going on with mortgage rates in April. There has not been any give. In fact, they continue to go up even higher, with average 30-year fixed rate now at 6.37. If you take a look at what that does to somebody's mortgage, this is on a typical 30-year mortgage with 20% down. I'll say on a median home price, typically somebody doesn't put 20% down on that. A lot of home buyers, especially people that are trying to enter into the home buying market, are getting an FHA loan and they may be putting as little as 3% down on the house. But if they're putting 20% down, it's still going to be an extra $86 a month in a payment, $31,000 in extra cost to that buyer over the course of a full 30-year loan. So a couple of reasons to feel like there's not a lot of relief on the near-term future for home prices. Some people felt like the Fed was going to continue to cut their overnight rate during the course of this year. Nothing that we've seen so far in the broader economic spectrum makes me think that that's going to happen anytime soon, especially in light of what's going on in Iran, creating a lot of uncertainty in the economy. Well, that begs the question, why, in the light of everything that's going on, are stock prices still rising for self-storage REITs? My only conclusion that I can make, that I can come up with, and feel free to contribute, is that the increased use of technology, the market is feeling like that's going to start to curb expenses in the self-storage industry, as operators are now able to operate more and more stores without having to add payroll expense. Using technology to replace humans in some of those endeavors is being received by the market very well. We're going to leave the storage stocks alone for now. I want to talk about something that my mentor, my boss at S3 Partners, the founder of S3 Partners, another person who has just an impeccable track record in the self-storage space, been involved in over 300 ground-up developments as both architect, general contractor, developer, owner's rep, you name it. He's done everything in the ground-up development space in both storage and also small bay industrial flex. Barry Sherman. I was lucky enough to come to work for him last year. June 9th will be my 1-year anniversary. So we're a little over 10 months we've been working together. And from the day that I joined him, we've been working on something big. Both of us have benefited incredibly over the course of our careers by getting involved with peer groups that helped us level up. Of course, many people know I spent a lot of my adult life as a martial artist. In the martial arts, you are only as good as the training partners that you're surrounded by and the mentors that are teaching you what it is that you're doing. So Barry has done this his whole career, both as an architect and as a general contractor as well, gotten involved in peer groups where he's surrounded with other people. Some might call them a competitor. We tend to look at that very differently. We tend to look at it as peers, people that can help us learn and do better in our own work. So we're really excited to introduce the round table. You'll get to see the graphic that I'm really excited about, the S3 Partners logo there. You can see 9 figures around the table, one highlighted in red. The concept, very simple. One curated meeting every month, 10 times a year. Take a break for the holidays for 9 members, and one live event every year for the 9 members of the table. The table, an exclusive niche within the industry. So if you're a self-storage developer, you have your own table. If you're a small bay flex owner, you'll have your own table. If you're an architect, engineer, you'll have your own table surrounded by other people doing exactly what you're doing, meeting once a month. 2 members of the table present every month. What are the challenges that they're facing? What are the needs that they have? And getting real feedback from other people that are in their space to help them level up. If that's something that resonates with you, if you're the type of person that believes by surrounding yourself with other high-level operators, you can level up your own game, reach out to me. I'm very easy to get a hold of. Thaddeus at S3 Partners. You can call me. You can text me on my cell phone, 609-636-0773. I'm on LinkedIn. Most of you know I'm pretty easy to get a hold of. Would love to give you details and get you a chance for a seat at the round table. Barry and I incredibly excited for this mastermind that we are going to be running. That will kick off actually our first table scheduled for June 4th. They will meet every Friday, on a certain Friday every month, depending on which table you're at. June 4th, June 11th, June 18th, going to be our first 3 tables launching. Flex owners, all my friends out there in the flex world, look forward to a call from me. Call me. Let me know if you're interested in getting involved. Self-storage developers and architects and engineers are going to be our first 3 tables, but please reach out to me. If you've reached out already, know I'm already ready. I'll be touching base with you very soon. That's it for this week's show. I want to give a quick shout out. We missed How Faith Fuels Your Business this week. That's my fault, and I apologize. Life has been a little crazy with what we're doing in the flex world and the storage world with what's going on with the round table. I've had a lot going on. Super excited to continue the How Faith Fuels Your Business segment. If you are someone that's strong in your faith, I don't care if you're Christian. Scott Zucker, who's Jewish, joined that segment a few weeks ago. I don't care what your background is. If faith is something that is fundamental to how you run your business and you'd like to talk about it, reach out to me. I'd love to tape a segment of How Faith Fuels Your Business with you. In the meantime, subscribe to the Storage Unlocked YouTube channel. Make sure you keep track of all of our content. That is it for this week's very jam-packed episode of Storage Unlocked. I'm your host, Thaddeus Campbell. One more shout out to our title sponsor. Couldn't do this without Guy Sacento and Hannah Montoya of PB Brown, such proud supporters of the show. And we are certainly grateful. If you have a project going on, ground up development, storage, or small bay flex, reach out to those guys early in the process. They can help you really understand what your costs are going to look like. We'll see everybody next week. That's it for this week's Storage Unlocked.